Good afternoon and welcome to this month's webinar, Financial Foundations, Part 2, Navigating Business Success Through Financial Strategy. Today's webinar is presented by North Star Strategic Partners. So first, who is North Star Strategic Partners or North Star or NSP? So we are a team of business strategists focused on helping your business increase profits. We ask the questions that you may not think to ask and examine the issues that may not always be at a surface level. Northstar has helped numerous customers achieve, grow, and maintain prosperous businesses over the years. Our speaker for today is Wendy Roberts. Wendy prides herself on creating winning strategies while helping her customers maximize their resources and their profits. As a CPA, she knows her way around corporate financials. As a former corporate finance executive and a startup CFO, Wendy offers a broad insight into finding solutions to help her customers achieve exceptional growth and financial success. She has a bachelor's degree in accounting from Indiana University, MBA courses at University of Tampa, and years of experience counseling customers on financial and profitable success. Wendy is a member of Audit Committee and a published author. She is originally from the Midwest and was raised in a working class family. One of her most favorite and cherished hobbies is cycling. She never fails to miss a weekend cycling in the Bay Area. So, couple of house rules. All questions will be answered towards the end of the webinar. A recording will be sent. We'll also be sending a short survey to the email address that you used to register to this webinar. So let's hear it from Wendy.
Thank you, Shai, and thank you to all of you who are spending your afternoon with us. We want to thank you for your attention, and also hopefully we can answer some of those burning questions you have about financials. Now, this is the second part of the financial foundation, and this is actually representing one pillar or one point of focus for our 4 points of focus. So if you can go to the next slide, please, Shai. Thank you. So as a reminder, the 4 points of focus is from the book called The Only Business Compass You Will Ever Need, the North Star Strategic Partners 4 Points of Focus. You'll find out about how you can order that later if you are interested in ordering. But what we have done over this series, we've taken each pillar and we're breaking it down into very specific areas to help you as a business owner be able to build your company. Now, the 4 points of focus came about when I started thinking about what is it that really builds not just good companies, but great ones. And so these 4 points exist in some very profitable companies. And my premise is if you implement these in your business, you're going to be incredibly profitable, have substantial opportunity for growth and sustainability. Now let's talk about them very quickly, and then I'm going to go on into greater depth on the financial part of the 4 points of focus. Okay, so the first one is marketing strategies. You got to be able to talk to your customer. So within the marketing strategies, you got to know who's your ideal customer, how do you attract that customer, and what does it cost you to do it? What's your ROI? The second pillar, which is our green that we're going to cover today, is the financial structure and growth. So we're going to talk about cash flow, which is super important. Every business owner knows cash is king. Profitability and how to maximize that. And when you're at some point in the future having that succession plan, when you're ready to be able to have your company sold or merged is very important in running and maximizing the value of your business. The next pillar, which is the orange, is operational excellence. Do your systems talk to each other? In other words, QuickBooks, your CRM, your payroll system, your other systems, do they talk to each other? In other words, are they optimized so you get the maximum results? Also, do you have procedures in place that you can take a vacation when you're ready to go, instead of having to work and slave in your business every single day? And the last one, which is blue, is people and team building. Does your team support you? Do you work together as one well-oiled machine? Do you have people in the right seats and the right time? So that makes up our 4 points of focus. So what our purpose here is to, I'm an accountant, so we got to do this, a formula, right? So we're saying the percentage that you achieve in each pillar is going to determine your overall success. So we say if you meet 80% or greater of each pillar that we teach in the 4 points of focus and in our book, you will be incredibly successful. So we're talking about 80% marketing, 80% finance, 80% operations, 80% people, which means you will have phenomenal success and profitability in your business. This is really what it's all about. Everything that you do in your business counts towards your success. Why not put forth as much energy as you can in order to achieve each one of these pillars? So as I alluded to, we're going to talk a little bit about financial. All right, I want to introduce, last time we talked about business entities and taxation, etc. This time, we want to talk about a little bit more of a deep dive about your financial statements. And those are the income statement, the balance sheet, and the cash flow statement. These are the 3 most important statements, or reports, that you can run in your business out of your QuickBooks, FreshBooks, whatever it may be. These are so very important. And we're going to go into a little bit more, but I want to talk about them right now. Because your financials, or these reports, tell the story of your business. It tells where you have been and what your future potential is. That's your income statement. It says, where do you stand right now? We're talking about why that's important in a balance sheet, because of the working capital ratio, especially if you want to borrow money or if you want to sell your company. The balance sheet, the working capital ratio is very, very important. So we'll talk about that. And the last one, which I think many business owners do not pay attention to, and that is your cash flow statement. You're like, wow, that's a big word. What does that mean? It means how well you manage your cash. Very important statement. If you don't know what it's about, please reach out to me and I'll be more than happy to go over it with you. And we're going to touch on it just a little bit today. So let's deep dive a little bit. The income statement. That kind of gives you a clue because it's based on income, right? Total revenue. So the income statement summarizes your company's revenue, the expenses, and the profit over a period of time. Remember, I said it looks at where you are in past and for future. It tells me whether or not you're profitable and what opportunities you might have to be able to reduce expenses so we can create more profit on the bottom line. And when we talk about bottom line, that means net income. Net income is very important because that's what you take home. That's what you might report in your taxes if you're subchapter S or partnership. It also tells me what is your potential for driving money back into the business so we can scale it and create sustainable profits. That's why we're all here. This is why we're in business, to create sustainable profits. And if you don't know how to do that, then our book tells you how, or we can help you through coaching how to get more profit out of your business. Now we're going to talk about 2 very important ratios, the gross profit margin and the net profit margin in just a second. But let's flip to the balance sheet. So the balance sheet helps you understand your assets, which are things that you own, your liabilities, which are things you owe, and the difference is your equity, what's left over, what's considered your net book value or your net worth on your balance sheet. And this is very important to bankers, and I'll get to that in just a minute. So the balance sheet provides a snapshot. Remember, the balance sheet, as I said, is a point in time because your cash is changing on a daily basis or on a monthly basis. But it's very important to know where you stand at a particular point in time. Now you're like, okay, why is that? Because if you go for money, let's say, for example, financing, if you want an SBA loan, you want a conventional loan, maybe you are thinking about buying, instead of leasing, buying a piece of property so that you're paying yourself first, which is so important. Those are all good reasons why. The working capital ratio, which is your total current assets divided by your total current liabilities, is very important to a banker and to a buyer. So if I have $1,000 worth of assets and $1,000 worth of liabilities, that ratio is 1-to-1. If my assets are less than my liabilities, let's say 800 to 1,000, that's less than 1, and that tells me your company is in distress. There is no way a banker is going to give you money and you're not going to get top dollar from a buyer. However, if my assets were 5,000 and my liabilities were 1,000, that ratio is now 5-to-1. So the banker says, oh, 5-to-1, I know that I can lend to you, the Mr. Business Owner or Mrs. Business Owner, and I know I'm going to get my principal plus interest back. I'm more likely to give you money. Now, on the buyer side, the buyer says, oh, 5-to-1, I'm going to get my return on my investment quicker. And obviously, there's great valuation or value in this business because it's turning cash 5-to-1. Now, when we look at a balance sheet, it's a very simple formula. And it's assets minus liabilities equal equity, which we talked about. Another way to flip that is assets equal liability plus equity. So if you think about it, the balance sheet is balancing, right? It balances. So you've got assets, you got liabilities and equity. That's the reason why we call it a balance sheet, is because we're balancing out what we owe to what we own. Okay, so let's talk a little bit more about assets, liabilities, and equity, because I think there's a lot of confusion with business owners. Assets are those things that you actually own. They have an economic value. And when you sell a business, you're probably going to have either a stock sale or an asset sale. I coach a lot of business owners and those who want to become business owners on why the balance sheet is so important to analyze when you are wanting to purchase a business or even when you want to sell it. In the case of an asset sale, you're going to be buying the assets of the company. Probably not cash or accounts receivable, although that's negotiable, but it's probably going to be inventory, maybe some IP, goodwill. That's the kind of assets you're going to be buying. And you want to know what is on the balance sheet and what the net worth is of those. Now, liabilities, in the case of a stock sale, you're actually buying the whole company. You're buying the stock of the business. So liabilities are super important because you're going to be acquiring those when you buy the stock of a business. And the difference, again, is equity. It's that net worth. It's that ownership interest that you have in your company after you take into account the assets minus your liabilities. Very important factor here. And that gives you a book value of what your company is worth. It may not be market value, but it's definitely book value. And that is important to know that from both from a buyer and a seller standpoint. Now let's flip over to the cash flow statement. Now for a lot of you, this might even be brand new. And if you've never run the cash flow statement, it's there for you in QuickBooks. In QuickBooks Online, it's easy. Just go to reports, do the cash flow statement. It's a very, very, very important statement. And if you're not analyzing it, you should. There's 3 different parts of it. One's called operating activities. The other part is investing activities, which you see up here over on the right side in this slide. And the final area is financing. So all 3 of those go up and down based on what's going on in your business. Now, why is it important? The cash flow statement, why is it important? It's because it summarizes the cash that's going in versus the cash that's going out over a period of time. And that's really important because it tells me, as your coach or as your advisor, how you've been spending and acquiring cash, how you manage your cash. The better the results on the cash flow statement tells me that you're either really good or you're not so good on managing cash. And again, remember, we said cash is king. Without cash, you can't survive as a business or a business owner. You need the cash. This is a very important statement to recognize and to follow. And if you're not doing that and you're unsure, I give a 30-minute free consult. Be more than happy to go over just this statement with you so that you understand it so you can better run your business. Now, let's talk about profit. We talk about profit in the book. You hear me talk about profit in many of the webinars I do. Profit is probably the second most important thing. And that is, if you don't have profit, yeah, you might not be paying taxes, but that also tells me that you're not very successful. So if you want to be able to build a sustainable, scalable business, you have to have profit. It's no way around it unless you have a bunch of money that you're sitting on from an inheritance or something that you can just continue to pour money into your business. If you're not making money, you're not profitable. So let's talk about gross profit and net profit. So gross profit appears in companies such as construction, or maybe a franchise like a pest control company, or somewhere where you are recording in your business subcontractors or wages of employees that are a direct relationship to producing a product, let's say batteries, for example, and the cost of the materials to produce those batteries. The difference of your total revenue minus those elements that I just talked about, which is called your cost of goods sold, that determines your gross profit. Now, if you're a service business, you're probably not going to have this, but it's still important in how you manage your business. So in other words, if you're in construction, you need to know your gross profit margin per job as well as your overall gross profit margin. And if you don't know how that all works, reach out to me and I'll be more than happy to help you. So gross profit, let's talk about the gross profit ratio, our percentage, which is very, very important. So it's the gross profit divided by your total revenue. This tells me how profitable you are or how well you manage outside forces, such as things like outside services or subcontractors or materials that you're buying from vendors. How well are you managing that? And if you have a low gross profit margin, you're probably not doing it very well. So let's say, for example, gross profit margin for construction should be somewhere between 30 and 40%. If you're only doing 20%, you're not profitable. Software companies should be somewhere around 60, 65%. So depending on that percentage of what industry you're in, that tells me how well you're managing those outside forces. Now, the next is the net profit margin. So this measures how well you are managing your expenses, all your expenses, to your total revenue. Now, why is the net profit margin so important? Again, because it tells me how well you manage all your expenses. The greater the net profit margin, the more money you have to invest back in your business. The more you invest back in your business, the more greater profits you're going to drive, the more sustainable you're going to have your business when there are things that don't always work out, like unforeseen COVID, for example. You've got sustainability that you can weather through it. So the net profit margin, that ratio is, again, your net profit, which if you look at your P&L, your profit and loss statement, look at the very bottom number where it says net income or loss. Divide that by your total revenue. So the higher that percentage is, the better. So restaurants, hopefully you're not in single digits. Hopefully you're at least in the double digits, around 12 to 15%. If you are a service-based business, hopefully you're somewhere between 25 and 30% profit margin. If you're not, then that tells me most likely your labor is too high, or you've got rent maybe that's too excessive. Something's going on in your income statement or your profit and loss statement that we could easily analyze and say, oh, this is the culprit. This is what we need to work on to help you increase your net profit margin so that you put more money in your pocket. That's the whole idea behind this net profit and the net profit percentage. So let's talk about some of the key tips in order for you to manage your growth and maintain that stability that we're looking for in our 4 points of focus, mainly the structure and growth point. First, create a financial plan. Have a plan of attack. Know what you're going to be doing. If you've never done one of these, I'd be more than happy to walk you through it. It's once you have it and you've got it in place, it's easy to follow the structure. The second is to track your cash flow. Remember when I said the cash flow statement is by far, I think, the most important report that you will get out of QuickBooks? The reason is so you can track that cash flow. We build customized cash flow analyses for you as business owners as part of our consulting services. That helps you manage the cash. We work with you to make sure that you are properly using it in a way that's going to be able to, again, create more profit and have much more success in how you run your company. Then the third tip is to minimize your overhead cost. We definitely take a look at those. I highly encourage that you review your financial statements, your reports on a monthly basis. Make sure you're on track with your financial plan. Make sure you are managing your cash flow. Very, very important. So some additional tips to think about. Net profit. Invest in your future. Invest in your growth. You deserve it. You're a business owner. You deserve to have a company that's profitable and scalable, that's going to maximize out the value when you're ready to move on to your next chapter. Next, very, very important. Expect the unexpected, because it's going to happen. Nobody could have predicted what happened with COVID just a few years ago. Major impact on businesses, major. And we're still seeing some companies still struggling after 4 years. And some of them are not faring well. They're going out of business. And if you don't know how to do some things, Spend the time and the money on professional help. It definitely makes a difference. We all cannot be experts in everything. Take some money and invest it in good quality expertise and professional help. Next, pay yourself. Pay yourself a salary. It's important. Why even go to work or have your own company if you can't pay yourself? Think about that. If you pay yourself, you're going to have a much better attitude about your own company. Don't be afraid to borrow money. Cash is king, yes, but leverage is also good. And I'm talking, there's a difference between good leverage and bad leverage. Good leverage are things like an SBA loan, a conventional loan, loans that are at a reasonable interest rate. Might even be credit cards that you don't have any interest payment on until 18 months from now. I would say use that sparingly. I wouldn't recommend credit card financing for your business, but you do it successfully if you properly manage it. And properly manage is the right word there. Getting loans like MCA loans, which are very expensive, we're looking 20, 30%. That is a cash drain on your business. It's better to go convert like a conventional or borrow money from friends and family than going through an MCA loan. It's way too expensive. I would only encourage those during certain times of only when you need it. So I'm more than happy to talk about different types of loan financing with any of you here on the call, or if you're reviewing this recording, more than happy to talk to you about what that means. Next is build good credit. Again, you can do that by borrowing money in a good way, not a bad way, but a good way. And always stay organized. The more organized you are, the more profit is going to be on your bottom line. Again, the more organized, the more you have in operations, the more profit is going to be driven for you to take home at the end of the day. Now, this is one of my favorite. Everybody knows about Warren Buffett. Who doesn't know Warren Buffett, right? He's a genius when it comes to how to manage funds and etc. So he talks about this. A company's financial structure is the foundation upon which builds its future. A strong foundation will allow the company to weather storms and grow sustainability. Okay? While a weak foundation can lead to financial instability and even collapse. I cannot stress this more. Have a good financial foundation. Know how to manage that foundation. Because if you don't have a good foundation, there's no way you're going to be able to create a very profitable company. Warren said it here, and I am concurring with him. Good financial structure leads to profitability. Now, if you like what you hear, reach out to me for a free 30-minute consult. Here is the book called The Only Business Compass You Will Ever Need. It's available on Amazon in either paperback, Kindle, or in audio. Here's the QR code that will take you right to the Amazon. You can order it and learn a little bit more about what we talk about in the 4 pillars, or the 4 points of focus. And we go into a little bit more depth in all of these. So love to have you reach out to me with your comments or put a comment on Amazon. The other thing you can do is, if you like what you hear, you can start working with us. And here's some of our services. We do strategic coaching and advising using our custom 4 points of focus, that methodology that I talked about earlier today. Also, we look at and evaluate your operating processes. That's part of the organizational excellence of that pillar. Customized cash flow management, we talked about that today. Profit, 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 making sure you have profit and you have your cost in sustained in a right way. Also, fractional on-demand CFO services, as well as key ratio analysis, will teach you how to use all the different types of ratio analysis. And then if you're wondering to know, what is my company really worth, and is it maybe the time to sell, we offer a valuation for you to be able to make that judgment. And if you wanting to get in touch with us, this is how you can get to us at info or at our telephone number. This is our main line. And then our website is at www.northstar-sp.com. All right, and then we've got some upcoming webinars. We've already gone over the marketing as well as part 1 and part 2 of the financial structure and growth. In May and June, we're going to talk about the operational excellence. That's pillar 3, our point of focus 3, which is the orange. So May 21st, we're going to talk about operational excellence, crafting an operational point of focus plan for business success. And then part 2 is on June 25th, cultivating a culture of continuous improvement. We talk about that and why that's so important. Then on July 30, we're going to talk about part 1, people and team building. That is our 4th point of focus. That's the blue. Nurturing your people and building exceptional teams. So hope to see you at those future webinars. And Shai, right now, I think it might be time for Q&A. And I do want to thank the audience for really spending this time with us. We try to make this as efficient as possible. We hope that you learn something from this. That's my main objective, that you take away a couple of nuggets that you actually have heard about and that you can implement in your business. So I'm open to questions.
All right, we have quite a few interesting questions, Wendy.
Okay.
The first one is, how frequent should financial statements be prepared and reviewed within a business?
Okay, that's a great one. So I'm going to say for most small businesses, monthly. If you're really small, maybe quarterly, but I believe a quarterly is a little bit too long. So I would say monthly, usually when your bank statement is completed or dropped or available from the bank, and your credit card statements, your loan statements, if you have any of your assets leveraged, et cetera, the frequency that's most common is monthly.
Thank you. Second one is, can you provide an example of red flags or warning signs that can be identified by analyzing financial statements?
That's a great one. Okay, well, I kind of alluded to that. One is if you have a net loss. That's a big red flag. That means you're not doing something right, or something is wrong in how you're operating your business. It's not turning a profit. Very few business owners, unless you're like a unicorn or you've got a lot of VC capital, run negative, right? You're not going to be in business for very long if you continue to run a negative net profit. So that's usually a really big number 1 red flag for me. Another one is, as I alluded to, your gross profit margin. So if your gross profit margin is pretty low, in my example, I gave like 20% for a construction company, and the norm should be, at least in this area, 30 to 40%. There's probably something you're not doing right when you're trying to manage your jobs. And I talked about the gross profit margin per job and the overall gross profit margin. So that tells me there's a problem there. Another thing is, if we're doing a financial analysis and we're looking year over year, and your income is dipped for this year, let's say 24 compared to 23, that's indication to me that we've got a problem, that we need to look at the top level, which is total revenue, to figure out, why is that happening? Maybe it's a staffing issue. Sometimes it leads to that. You have individuals who are supposed to be making sales for you, and they're costing you money. They're not making you money. So that's an example. Really analyzing your financials, especially your profit and loss statement and your cash flow statement, is going to be a really good indicator of where some of the problems are going to be, and it's not hard to find once you start analyzing them. Hopefully I answered that question with some examples.
Thank you. You did. The next one is, how can businesses ensure the accuracy and reliability of their financial statements?
Okay. I would hire somebody who knows what they're doing. I kind of joke about that, but in a way, I'm not really kidding. Uh, nothing against the accounting profession. I've made it my profession for well over 25 plus years. But know who you're hiring, and if someone is charging you a nominal amount to do your accounting or bookkeeping, then they may not be putting the effort in to be able to make sure all the numbers are right. You got to make sure your numbers are right so that when you plug it into a cash forecast, or when you're looking to expand your business, or when you want to be able to borrow money from the bank, if the numbers are wrong, it could have a poor reflection on you as a company and you as the owner. So don't go cheap. Don't go cheap. Spend the money to be able to get the right numbers and the right presentation, because it will pay for itself in the long run.
Awesome. Thank you. And the last one that we have here is this. So, what are the main challenges or limitations associated with interpreting financial statements specifically or especially for non-financial professionals?
Wow. Can you repeat that question one more time? That was a long one.
Sure. What are the main challenges or limitations associated with interpreting financial statements to non-financial professionals?
Okay. Well, I'm going to kind of assume, based on that question, that they haven't had any kind of financial background or whatever. I would say educate yourself. Attend these types of webinars. Go and read books on read the North Star book. Read the 4 Points of Focus. Read other things so that you can educate yourself, and find a professional who can teach you and guide you, so that you can understand really what it means, that what we talked about today. My objective today was not to make you an accountant. That's not the objective. The objective is to help you find key elements that we talked about today, or that we can talk about in the future, or that you can get your education from on various YouTube presentations, etc. Those key elements that you need to know as a business owner, as a CEO, those are so important to be able to manage your business. And we help you do that. We help you lay out all of that information so that you can be better as a CEO and better as a business owner. You don't need to be an accountant, but you do need to understand what your financial statements are telling you, because they are telling you a story. You want it to be a good one, but you also want to know if it's not so good. And you want them to be able to take the necessary actions to be able to put in place so you can get back to that good story again. Hopefully I answered that question to the individual who submitted that. And I thank you for that. That was a very thoughtful question.
Very well said. Thank you. Those are the questions that we have for today, Wendy.
Okay, perfect. All right. So thank you everyone for attending today. My hope is that you learned something today. You've gotten some good nuggets that you can apply in your business. We want every company to be successful, because at the end of the day, we're the ones that are providing jobs for our communities, as well as the overall health of our economy here in the United States and around the world. So thank you again for your time today. We hope you have a wonderful, wonderful afternoon, and we'll see you next time. Thank you so much.